Looking over at vol, as suspected, we said we saw a drop in realized vol into expiry. We then obviously got that big uptick, so 7-day realized did pop, but then that was brief, and then it started to fade again. So on the week, we see realized vols down about 5 vols. Short-dated implieds on BTC have drifted lower over the week, not by much, but they are off their lows seen on Friday, as that expiry kind of ended up pinning quite near 30k. ETH vols are higher on the week. ETH's obviously been able to move more since the expiry, and it's registered a better realize for the first time in quite some time. ETH's currently showing flat carry, whereas BTC has got positive carry around 4 vols, as realize has dropped off more there. And then option buying flows have kept a bit of a bid to the implied vol. The main macro event this week is going to be non-farms. Like we said already, it's going to probably likely impact rates in the dollar, and that may in turn drive crypto. Overall, bullish price action. If it continues, we would expect vol to remain firm above 31k. We think vol's going to remain firm because a lot of calls have been bought. So dealers will be net short above 2,000 on ETH as well. But below these levels, vol's susceptible to getting hit. So if spot can't break higher this week, then heading into the weekend post non-farms, you expect vols to find some pressure again. Okay. Looking at term structure, we've got term structure was a little changed in terms of Bitcoin. Didn't do a whole lot. It was a very slight drop in the front, and the medium term vol had a small bid, but it wasn't material. ETH curve, however, did shift in parallel about 2 vols higher. As you can see that here, shifting across the curve. So that's nice to see for those of us who are long vol on ETH for a change. The ETH Bitcoin vol spread therefore recovering. You see here, I've got the ETH curve and the Bitcoin curve plotted on the same chart here. You see the ETH curve has gone actually above. ETH's in blue, Bitcoin's in yellow. So ETH curve is actually above in the front. So ETH's back to being over Bitcoin in the front end, not so much in the back end, right? Still got Bitcoin above in the back end there, right? So that's got a bit more memory in terms of, because Bitcoin has been dominating for so long now, that long end would need to see some ETH really running the show for a while for the whole curve to kind of reprice, and we haven't seen that yet. And we know there's been quite a lot of supply of that longer dated ETH stuff coming from those big overwriters, right? So that's also pressuring the ETH curve in the long end. Yeah. So that's where we are in terms of term structures and vols, but we are seeing a slight recovery there in ETH vol in general. And then looking at SKEW, Bitcoin SKEW still in call premium, as is ETH across the curve, but the front end is much flatter than the back, right? So interesting to see the back end being the purple line here, spiked to as much as 8 or 9 vols for longer dated call SKEW in Bitcoin. That was at the weekend, but it's all faded down a bit, but you can see very much the front end is the flattest. So the front end is looking at about 2 vols and the back end still at about 5 vols. So that's Bitcoin. So it's got a call SKEW everywhere, but with the term structure that goes from flat, from 2 vols up to 5 the longer we go out, basically. And the reason being there is just, the put SKEW kind of reacts faster in the front end. So if the market does fade below 30k, you're probably going to see a load of short dated call demand come in, and you're going to see that dark blue collapse back to 0, or even going to put territory. Okay, because people just quickly flock to very short dated hedges to just protect their risk. Okay, so that's kind of how it works. So the long end is going to be more persistent, and the front end SKEW is going to be more reactive to spot, particularly on the downside, we believe. ETH SKEW has been trading with less of a call premium, but we're looking at about 2 to 3 vols across the curve here. So a bit of a mixed bag in terms of the term structure of that, but generally all pretty similar at 2 to 3 vols. The back end call premium has been very volatile. It got up to 5. It went below 0. It's back to about 2 or 3 now. So ETH, and I think it's just a liquidity thing, right? ETH call flows have been quite chunky this week, and it's kind of pushing the SKEW around a bit in terms of how it's moving there. Now, we do expect longer dated call SKEW to remain firm across crypto option markets, given the end user flows are to buy upside, like by a mile. That's dominating the flows. We do think that put SKEW in the front end is probably cheap, and we'd expect it to be very reactive to spot moves down. So if you want to get leverage to a spot move down, if that's what you think is going to happen, then owning that put SKEW in the front can kind of work well against that. Implied vols are still quite low, so vols have got potential to react in either direction in theory, but so far this year they only seem to spike. Vols only really seem to spike on the upside, right? So you would need to have a pretty sinister move on the way down for vol to really react, I believe. But vol is cheap; it's not expensive, right, at these levels. So it can, if you get a scary piece of news and you get 10% sell off in crypto, vol will react, and SKEW will definitely react, I would have thought. Okay, so that's what we're seeing across vol and SKEW. Jumping over to the flows. So normalizing a bit in terms of volumes. We obviously exploded the volumes the week before, but because spot took a pause for the biggest expiry of the year so far, flows did chill out a bit. They did have a bullish bias. We saw outright call buying in good size across July, August, and September expiries. 32k, 35k type area there. Longer dated call spreads were also being bought in September and December. That's kind of in the 35k, 45k strike call spread, and even higher up in December. And then some December puts were also sold as funding legs. So we saw things like the 45k, 60k call spread get bought against selling the 22k puts to fund it, basically, right? So people looking for extreme upside without a load of long Vega risk and happy to underwrite with some deep downside in December, right? Because they're playing the halving dynamic and the idea that Bitcoin's going to have a ton of support in that low 20s area, basically. Well, that's what they're clearly thinking anyway. And then Ethereum flows, big buyers came in this week after the OPEX. Obviously, largest clip by country mile was the December call spread. It was the 19, this strike, versus the 25. So 1,900, 2,500 call spread bought in 60,000 options. Massive chunk, $10 million of premium being spent there. We did also see outright buying in the 22 calls in September. So that's this big orange bar here. We saw July upside getting bought as well, 2,000 strike calls. We did see some selling on the July 22s as well, but it's not really enough to move the dial. Clearly a dominant bias towards buying calls, buying upside in Ethereum, because people are thinking maybe Ethereum comes alive a bit now. Bitcoin's had its move, had its dominance. ETH looks decent value. If the crypto space in general is getting more institutional adoption, not institutions will not only buy Bitcoin, they will potentially allocate some money to ETH as well. And then we might also get positive news around an ETH ETF. If we get the Bitcoin ETF, don't be surprised that an ETH ETF comes pretty damn soon after that, you would have thought, right? That would be my guess as to why you might then get a catch up. Okay, gamma positioning, more balanced after the massive expiry. Obviously, we flagged big divergence between long gamma on ETH, short gamma on Bitcoin. That's kind of all gone away now. They're both looking much more flat. You can see Bitcoin here, very negative gamma, got to about flat. Very positive gamma on ETH, got to about flat, right? So that's where we are. The 30K strike had been the big short strike. That's gone now in Bitcoin. Open interest has obviously rolled higher into July expiries. You see all these shorts on the upside in July. So that is the setup. Dealers will get shorter as the market rallies in Bitcoin. But then also we're seeing gamma positioning on ETH dropped materially as those 18 and 1900 strikes in June went away. Now, obviously, now that gamma has been released, the market's freer to move. If we look at the setup now, the streak seems to be short the 2000 strike, long the wings against it. So that's a much more balanced, more gamma neutral setup. So I don't actually think the gamma positioning on ETH is going to have any material impact on ETH, and ETH's just going to do what it wants to do based on spot flows and futures flows. So that I don't think the options complex is going to be a massive feature in that right now because the positions just aren't big enough. The gamma positioning is not big enough, right? The time when gamma positioning helps you make decisions around your positioning is when it's extreme. And when it's neutral, it's not telling you a lot, basically, right? So it's not going to really help you, guide you very much. Okay, what have I been up to? That is your Crypto Weekly for this week, and I'll catch you all next week. Thanks a lot.